With that, it's time for a conversation. And of course, like I told you earlier on, it's been a big evening for the Finance Committee. The chairperson, that is Kuria Kimani, has tabled the report of the Finance Bill 2023 before the House. And tomorrow morning, they should begin the process of debating that bill. But at this stage, it will just be debating because some of the amendments that are being proposed and many that will come from members of Parliament will come at the next stage of the committee stage. With us this evening is Dr. Makali Mulu, the Member of Parliament for Kitui Central Constituency, but also a member of Parliament, member of the Budget Committee. We're still expecting the arrival of Kuria Kimani, who, like I told you earlier on, just tabled the report less than 30 minutes ago. He's on his way here. As soon as he joins us, we'll be sure to see him to answer some of our questions. But first, let's start with you, Dr. Makali Mulu, with the process that you've seen. Kenyans discussing, debating the Finance Bill 2023. We've seen some of those concessions that are said to be contained in that report by the Finance and Planning Committee. What do you make of it, and have we made progress?
Yeah, thank you, Sam. And let me say evening to the viewers. As I told you earlier, Sam, I traveled to Kitui to bury one of my heroes, the late Dr. Tony Woods. So today I was not able to attend Parliament. That's why I came slightly earlier than the chairman,
right,
Kimani Kuria, because as you have just seen, he was in the House tabling the report. But from what you're asking, what we need to note, Sam,
right,
is that what we have been discussing as Kenyans is the bill is published. So after publication, the bill was tabled in the House. It went through first reading, and then it was pushed to the committee to do public participation.
Right.
And that's why a lot of Kenyans have come out, and we must commend Kenyans for coming out in big numbers to give their comments on the bill. Now, informed by the contribution from Kenyans, the committee retreated and they went to Naivasha to consolidate the comments from the public.
Right. Consider
them, and then make decision based on their own judgment. And that's the report which Kuria has tabled. Earlier, he had indicated that it's a 500-page report. You've seen the speaker. It has just been tabled about 15 minutes ago. And the speaker has already pronounced himself to the fact that tomorrow morning by 9,
right,
he wants some of us who have been debating this thing in funerals, in TV shows like what we are doing with you, and in another forum, to be ready to debate tomorrow by 9. And I must say I'm a very frustrated Kenyan, Sam.
Why?
The reason I'm frustrated is, if you look at your watch, it's almost 10. Actually, it's 10 plus.
10:11 now.
And that's the time the House is just adjourned. This report is a 500-page report. And you are being told tomorrow morning by 9, you are debating it. It makes the House look very bad. Because where do we have the time to read this report?
Right.
Committee report is supposed to inform debate tomorrow. So between now and tomorrow 9, most members have already left the House. The report, you can't get a copy of that report before it's tabled. So after tabling, it will go to the table room, where it will now be photocopied, and you can get copies. So at what time do we give members time to look at the committee's report so that it informs the debate? Now, what will happen tomorrow? People will continue debating this bill as published. Well, a number of amendments have been made by the committee. The committee has given, as you are saying, some concession. And to me, the fact that they have accepted to amend some sections is just it's like agreeing with Kenyans who have been saying that some of the proposals are not good for the country. So first of all, we must commend them for the little they have amended, but I still think the big part of the bill are still a number of issues. And I would like, when the chairman comes in, first of all, to start by telling us what areas they have changed, so that when we are debating tomorrow, we don't debate things they have already changed.
Right.
What is the financial implication of those changes? Because some have said many times, anytime you have a financial proposal in a bill, right, a finance bill, at the end of the day, it turns out to figures. that as a result of this proposal, we'll collect either 10 billion or 100 billion or 200 billion. So we want to see, what, as a result of these amendments that are proposed, what figures are changing. And at the end of the day, how much is likely to go back to Kenyans? Because what we have been saying all along is Kenyans currently, what they have in form of disposable income is a big challenge. Some of them are not even able to feed their families. And in such a situation, we would want a finance bill, which at the end of the day is going to push more resources to the Kenyans to reactivate their economic situation, and as a result of that, trigger additional consumption through demand, which is likely then to push the economy up.
All right. Dr. Makali Mulu, I hear you. The chairperson, that is Kuria Kimani, is in the building.
Yes.
We're just expecting him to make his way here.
Yes.
But some of the proposals, as reported by Seth Olale, is that the housing levy is being reduced from 3% to 1.5%, still to be contributed by both the employer and the employee. We don't have details of what the cap is, and in terms of effective date, it is to be implemented starting 1st of July or immediately after the bill has become law. Does that make sense for you? I've seen a statement from Azimio saying that's still not good enough, the 1.5% reduction.
You know, Sam, this 1.5% is what was proposed by the former president in 2018. And they also rejected that proposal. And if you've listened to Kenyans, and I think a lot of us have listened to Kenyans, what Kenyans are saying is the 1.5% or the 3% is just one of the many issues they are raising about the housing levy. You know, there were issues to do with the accountability. There were issues to do with what framework is there in terms of legal framework to ensure that when the money is collected, Kenyans can be able to know anytime I want my money, who do I go to, how do I access my money. There were issues to do with what happens to Kenyans who are about to retire. There are issues, serious issues raised with and this was very serious. Serious issues raised to do with the time it's likely to take for you to contribute to a level you can actually have a house. You know, initially we were talking about 100 years plus. Now, by what they have done, the number of years is now been pushed even to over 200. And the question is, if I'm contributing today, and in another 200 years, maybe we're talking about my third generation. So there must be a very clear legal framework to make sure that that contribution of mine today, if I'm not able to access it, is able to move from my first generation to second generation up to the third, because they will get the house at around that generation. And these are reality, these are issues which are serious. So we are saying, even as we discuss about the 1.5%, is a step towards the right direction. But I think what Kenyans have been saying is how they wished that this contribution through the levy was pushed by a year, so that we allow these other external factors which are important to be put in place. The legal framework, the financial framework, the administrative framework, so that at the end of the day, I know when I contribute my money, I can access it. We've been saying NSSF is there. When you contribute your 200 today to NSSF, although the figure has gone up, you are sure that when you retire, you have a mechanism of how you access your money. By applying, then they will look at your contribution, and then, so there's somewhere you know I will go there. When you give your money to NHIF, you know very well that when I go to a hospital, I'll be able to have my card, and as a result of me having my card, I'll be able to be treated, and then the hospital can bill the NHIF. So these are the issues. And
Dr. Makali, your colleague, member of parliament, that is Kuria Kimani, is now here with us in studio.
He's my good friend.
He spent a long day.
He must be very tired.
At the National Assembly. And we saw him obviously presenting that very huge document, tabling it, and of course being received by the House and committed to the House to begin the debate tomorrow morning.
Tomorrow morning, yes.
Yeah. Good evening. How are you?
I'm surviving, Sam. It's been tough, but we have to get the job done.
Great. How many pages are those that I saw you carrying?
The report is around 500 pages, and with another like 3,500 pages of annexes. So we're talking about at least 4,000 pages of documents.
1,500.
No. Yes, so around
Annexures.
4,000.
Around 4,000.
So about 4,000
Yes.
pages. So for a member of parliament to start debating it tomorrow, what are they supposed to read?
The good thing, and thanks to the media, because they've really given this particular discussion coverage. It's the most discussed bill in the whole country. You know, I keep telling people I was in the village with the other weekend, and my grandmother was asking me, did you invent the finance bill? Because they think it's something new, and it's something that has always been there. So thanks to, okay, first of all, the work that you've done, the public giving their views, and also the coverage that we got from the media. You know, everyone is talking about the finance bill. You know, it's almost like it's a constitutional amendment, and it's just one bill. So we have a majority of people are actually well informed, and we have done our part to make sure that we uphold the values of our constitution by making sure that we inform the members of the public. We made sure that all our sittings were open to the public and to the media. And so, even though you're saying very huge documents, that's just the evidence of what happened. But I think we have constantly kept Kenyans involved about the proceedings of our committee and the proceedings of Parliament in relation to this finance bill. Okay,
then let's get straight to some of the proposals, or what you understand as some of the amendments to the bill. You can correct me if I'm wrong, that there's going to be the reduction from 3% housing levy to 1.5% contributed by both employer and employee. Is that so?
Yes. When we listened to the members of the public, they were saying 3% was too high. Right. They were concerned about, most people are calculating and saying, I have committed all my pay slips, so if you charge me 3% of my gross pay, then it might actually affect, I could get to the negative. And we thought, but the same public were telling us that there is a very absolute need for government to provide affordable housing, because when this function is being left to the private sector, then we haven't seen a lot of change. We still have mushrooming slums, and I even quote in my constituency, Molo, we have a very big slum in Elbagon called Kasarani, Eastleigh. We have another slum called Casino, and people are saying, fine, we appreciate the need to have this affordable housing. We appreciate that this is going to have a ripple effect on employment, on businesses that are going to provide with the cement or the labor or all those things. But they're saying, no, fine, I can't afford 3%. So we said, fine, let's do half of it. Okay, so what's the cap this time? Yes, that's another issue. Remember, even my good friend Okio Mutata went to court saying that this is discriminatory. Because what was happening, Sam, was I of course, my salary is in public domain. I earn more than 500,000 shillings a month. And I was going to pay 2,500 shillings a month. So if a person who earns 500,000 shillings gets to pay 2,500 shillings a month as a cap, it means my contribution to the levy is much less than 1.5%.
Wait a minute. So it was 3% of your salary, 3%,
but capped 2,500.
Yeah, but the employer capped at 5,000 shillings. The cap remains.
So it was capped at 5,000 shillings,
right,
for both employee
and employer. Yes.
So what that meant was employee contributes to 5, maximum to 5. Yeah. Employer contributes maximum to 5. But what does it mean practically? It actually means that for someone who is earning a lot more, like yourself and I, we still contribute a maximum of 5. So if I contribute 2,500, and assuming my basic pay is 500,000 shillings, then I'm not contributing 3%. I'm contributing much less than 3%. But the people down the salary scale, someone who is earning, say, 30,000 shillings or 40,000 shillings, they have to pay 3%, apart from me. So the proposal, as given to us by Treasury, was actually discriminative to people down the tax bands and advantageous to those people who are earning more, which our committee felt that was a fair comment. That was a fair view. So what we're saying now is that if we are reducing it to 1.5, it's a flat rate of 1.5. So that the person earning 30,000 shillings, or someone earning 500,000 shillings, or someone earning 6 million shillings a month gets to pay the same percentage of their gross income, because that is the essence.
Okay. I'm just making some quick calculation and saying that initially any person who was earning about 80,000 thereabout was going to contribute the maximum, which is 2,500. Now that has doubled to a person earning 167,000 shillings a month will still contribute the maximum, which was 2,500, and the employer contributes the same. So that doesn't change for people above 166,000 shillings, but changes for the others because of the percentage. But Honorable Makali Mulu had highlighted that that was not the problem in the first place. It was the question of the framework, the structures that have been put in place. But if your proposal is to implement it immediately, how then will you address those questions of the structures and framework?
Thank you very much, sir. The proposals that Kenyans came to us, they told us, we got examples of the equalization fund, for example. How does equalization fund work? You and I and my friend here, Dr. Makali Mulu, contributes our pay, contributes our VAT, contributes our excess duty. It's put in a consolidated fund. And this consolidated fund oversees some counties that are less marginalized than others, and says the county of Mandera should get an equalization fund of this much, and the county of Lamu, because of being marginalized, gets this much, or the county of Baringo. But the county of Nakuru, where I come from, which has the highest population and which contributes to a great deal into the consolidated fund, doesn't get to benefit. So telling us we don't want that. We want this to go to a natural course. We have identified there's a need for housing. We've identified the ripple effect of housing projects in the country in terms of revenue generation, in terms of job creation. Fine, we want to contribute to it. So that is what has, in fact, that is the gist of the changing of this house levy. Because now we are all contributing to a fund that goes into the consolidated fund, that goes to the housing projects.
Say that again, a fund that goes to?
The consolidated fund.
But we were told earlier that it doesn't go to the consolidated fund. What has changed?
That's why we did public participation.
These are the amendments now.
That's why we're doing an amendment.
So this money will be part of the consolidated fund?
And that is the beauty of listening to the public. Because the public was telling that we don't trust you setting up this particular fund now. Because if you're setting this particular fund now, give us the regulations. So saying, no, fine. People told us that, I don't mind, we have identified the need for housing. We don't mind that.
Okay.
There's a need for housing. We also appreciate the ripple effect of the employment that's going to be provided on this housing. We appreciate that there's a need to organize our housing sector. That's a need that we all identify. That we need to sort. So how do we sort it? And then stop all this, in the words of many of our stakeholders, Kiingereza mingi. Stop all these Kiingereza mingi. Let us contribute towards a kitty, and this kitty goes to construct houses that, first of all, have to be affordable. So the responsibility that this bill in our report is put into the executive is, first of all, make these houses affordable to Kenyans. You told us that we are going to do these houses for people in the slums. Make those slums disappear. Do something about those slums. Build infrastructure in those slums. You told us that I can pay the equivalent of my rent for my mortgage. Make that happen. And that is what we're giving the executive. And we're going to hold them to account that they make it happen.
Okay, we'll come to that because we need to dig in on what exactly that means. But first, let's listen to the president and the deputy president because they spoke about what has been happening in the country about the Finance Bill 2023.
Tuliambiwa tutoe 3% ama 1.5% ili hawa watoto wetu wapate kazi. Wewe unasema hiyo inanihusu na nini? Surely.
Tumesikia bunge wameanza tena kutoa ile vitu uliweka. Tunaomba bunge tafadhali mtuachie hii mpango wetu. Lakini pia tunaheshimu nyinyi. But please don't mutilate our plan.
All right. Now, so the president says that we've had people saying we remove the 1.5%, the deputy saying that you should not mutilate the bill. First of all, Dr. Makali Mulu, what does that mean for you?
You know, Sam, before the chairman came, I told you that their report is very important. Now, from what he is saying, if I got him right, is that now they have changed from collecting a levy to a tax. So from what is now the chairman is, if the money is going to consolidate fund, they are creating a housing fund, it means then people will not be expected to claim back their money. We are creating a fund to do housing and then low cost housing and then support those Kenyans who are at the lowest level of the pyramid. That's my interpretation. The other thing what he is saying is that they have now moved from 3% to 1.5%. When we had 3%, anybody who was earning above it 3,000 was paying less in terms of percentage. That's why the issue of discrimination was coming in. Because you realize that anytime you go. So what he's not telling you, and I think he needs to say it openly to Kenyans, is that the idea of now pegging it to is 5,000 off. So that now I will only pay 1.5, irrespective of, and the ceiling is not there. If I earn $1 million, I have to give 15,000. Is that the case every month? If I earn 500, I give my about 7.5 Yes. So that now the issue of the ceiling of 5,000 disappears. I think that's what you're saying now. So you know, earlier I was telling you, Sam, and I think the chair, you need to clear this air. You just tabled this report 30 minutes ago, around 10, this evening. The speaker announces immediately that tomorrow 9, we are debating your report. Now, between now and tomorrow 9, a report of 500 pages, main report, and 3,500 annexed here in terms of pages. What time do we have to read that report as parliamentarians? We already read the published bill, which anybody is now contributing based on this. Your report has brought very important amendments, which can actually change the perception of Kenyans. But we have the time now to internalize these changes and then tell Kenyans this is what is there. What was the rush for? Because I think we still have up to 30th June to pass this law. The law can only be effective 1st July. So to me, that's what some of the things, Sam.
All right, I don't know whether you have a response to that.
But if you allow me, Sam, and with all respect to parliamentarians, I would dare tell you, I don't remember the last time I had a sleep of more than 4 hours in the night. Because we had to get this done within a deadline. Honorable Makali Mulu, he's a more experienced legislator than I am. I'm doing my second term, he's doing his third. And so he understands the importance of deadlines. We have, on Wednesday, for example, there's a gazetted day for when you're reading the budget. And if it's not even for, yes, Thursday, yes. And even if we take the lower side, common sense will tell you that we need to finance the budget before we approve it, before we expend. You know, you cannot spend what you don't have. So essentially, we should do a committee of supply and supply money to the budget for that budget to be approved. And this is where sometimes I felt really, some of my most down moments when I was doing this bill with my committee and the report was, if I compare with what the Committee of Budget and Appropriations Committee, which Dr. Makali Mulu here sits in, the public participation was a very happy exercise. Because Kenyans were saying, we want roads, we want dams, we want electricity, we want hospitals. Nobody thought about the supply side.
Who's going to finance?
So I have to do the heavy lifting of the financing of the budget. Dr. Makali Mulu, in his Committee of Finance and National Planning, have already agreed on. We stayed late tonight. The reason why I have just tabled my report around 10 p.m. this evening was because we took all the time to do what's called the Committee of Supply to agree on what the budget is. And every departmental chairperson at the Committee of the Whole House was saying, okay, fine, I support the amendment, but this department is underfunded. This department is underfunded. This department is underfunded. But who gets to think of what funds that department? Unfortunately, it becomes the role of the Committee of the Finance and National Planning Committee. But when we are thinking about the projects we want done, the jobs we want created, nobody thinks about where do we get the money from. So, fine, I'm sorry, you have to read the report before tomorrow, but come on. You have just approved the budget and have to finance the budget before you approve it. And this is, to me, and what I've listened to Kenyans, the best way to do it. But even if I would...
Why tomorrow?
Even if I would be
tomorrow? Which deadline are you adhering? Because some... let me just...
Dr. Makali Mulu,
it's good he clarifies. He said I'm an
experienced legislator.
I'm actually a ranking member in Parliament. And the thing is, Sam, with the new constitution, the statement by the CS Finance or Treasury is not binding to anybody. It's just a summary of the budget. What is binding is what Parliament will pass. And we have up to the end of 30th June. So this gentleman will come on Thursday, will make his statements, he will go back to Treasury.
But let me ask you...
Chairman Kimani and his team, and the Didi Nyoro with us, who are in Budget Committee, we are expected to do our work up to so that we do a thorough job. You know, he's complaining about financing. One of the things we have been saying, Sam, all through, is that this government needs to look at the expenditure side. The expenditure side is the budget. That's where I sit. He sits in the financing side. So we are making this work very difficult when we don't take time to look at the expenditure side. If you look at the budget, it was passed in less than one sitting. The second sitting, because of the issue of Sabina Cheke, the speaker raises and says the budget is passed. No,
with all honesty,
just hold this so that we are
Sam, just give me a right of reply on this. But with all due respect here to my senior, and respectively so, we have stayed this late to pass his budget. As in, I have just left the Parliament at 10 p.m. because we're doing a Committee of the Whole House to pass the budget where he sits, which he has signed.
That's what I want to ask you, Dr. Makali Mulu.
Yes.
Because the estimates of recurrent and development expenditure for the year ending 30th June 2024 have just been passed by the Committee of Supply. So when you said that the statement to be tabled by the CS National Treasury is not binding, what will you do with what Parliament just passed?
I mean, normally what would happen, Sam, and Sam, with all due respect, the area of budgeting and planning and strategic planning is an area I have a lot of expertise in and a lot of experience. Kimani can attest to that. What I'm telling you is, the way you normally do things, this year is very unique. Actually, the first year of Kenya Kwanza government, it matters budgeting, and more so the main budget. We've done it very, very, if I were to rank it, it's the lowest. I've been in Parliament for 11 years, it's the lowest in terms of budgeting. Normally what would happen is, once we get the budget ready, if you remember initially, under the old constitution, this committee would only come after 30th June. Actually, the finance bill used to be tabled around 30th June to be debated from 1st July to September, long after you pass the budget. So what would normally happen is, when you come to the House, the budget is tabled by the chair, budget committee. You have your second reading, where you do a lot of debate. People would be able to articulate issues relating to different sectors. And after that, then, which would normally would take about 4 sittings. Actually, the whole of the last week would have taken to debate the budget. Then this week, the whole of this week, would be Committee of Supplies.
Okay.
So that you go department by department and look at areas where you think these areas are important, but there is because some of the areas, and I can mention them, I sit in the Budget Committee. Even as the chair is, and I sympathize with the chair, I don't envy his job because I know what he's doing. But I'm telling you, would have made this work very easy if we went item by item in terms of expenditure items, because we would have been able to say, this expenditure item, more likely would save money from it. There's also the other thing. When the economy is not doing very well, It doesn't harm anybody if you said some of the proposed development projects can just be rolled over to the next financial year.
Okay.
So that Kenyans can finance
But Dr. Makali Mulu, just hold on. I'll give you an opportunity and enough time.
Yes.
Just respond to this question, because the National Assembly just passed in the Committee of Supplies to give 2.3 trillion shillings to the national government, that is to finance both the executive, judiciary and legislature. Is that binding on the cabinet?
Yeah, once it's passed by the House, it's binding. So what it means is actually the work of Ndidi Nyoro...
this has to be reflected on what CS Ndungu...
Now Ndidi Nyoro work is finished.
Okay,
now,
all right.
The ball moves to his court.
Oh, all right.
Now, what happens now with that passing, now the statement CS Ndungu will be reading can now be the final figures, because now the budget has already been passed.
I get that. Now, Kimani Kuria, let's clarify something, because I think we might lose it. The cap of 5,000 is no longer there.
It's no longer there, but Sam...
Just hold on.
Yes, okay.
So it's no longer there.
There's no longer a cap.
So if you earn $1 million shillings, you're charged 1.5, that's 15,000.
Yes.
Contributed by the employee
and the employer.
And the same contributed by the employer.
Yes.
If you earn 200,000 shillings, you will contribute 3,000 shillings, the employer 3,000 shillings.
Yes.
So that actually goes higher. It is actually now more expensive.
Yeah, it's more expensive.
It's, okay, the principle of taxation, for example, is based on ability to pay. Where those people that earn more should actually pay more. And those that earn less get to pay less. So if we take, for example, what the executive gave us, and just to get your maths, let me quickly get my calculator. If I earn $1 million shillings a month, like I do, and I pay 2,500, so 2,500 out of 1 million shillings a month, it means I'm paying 0.0025%. Whereas that primary school teacher who earns 30,000 shillings a month gets to pay 1.5%. Is that fair?
So this has become a tax now?
No, I'm just saying, I'm using the principle of contribution and saying, if I pay 1.5% of my 1 million, and I cap it to 2,500, I pay maximum 2,500, it means I'm paying 0.0025% of my basic pay.
That's true.
But that teacher or that nurse or that messenger or that receptionist who earns 30,000 shillings a month is paying 1.5%. Is that fair? That's why we thought that let's make it equitable, so that everybody pays the rate for share of tax. But just so that we get things clear. Again, Dr. Makali Mulu tells us after you've passed the Committee of Supply, now you've passed the budget. And therefore, the work of the Cabinet Secretary for Treasury on Thursday. Is more or less to report what Parliament did. And then he wants to give me the role of trying to finance the budget that he has done and give me time up to September. What should come first?
No, September is no longer there now.
But no, I'm just saying, that argument.
But the finance bill will not be enacted by Thursday.
I'm just talking about the reasoning. Sam, what should we do first? Should we first raise the money, or should we expense it first? As in, really, the ideal practical situation is you earn your money, you raise your revenue, and said, no, come on. In this household, my wife earns 20,000. I earn 20,000. So we earn 40,000, and we do our budget. But as it speaks, Dr. Makali Mulu has already approved a budget that he gives me the responsibility to finance. And he doesn't like it now when I say this is how to finance the budget he has already approved.
Can I clarify?
Makali Mulu, because just hold on, please note it down. I'll give you an opportunity. I want us just to, first of all, reflect on what exactly we are talking about, and that is contained in the finance bill as published at the moment. Of course, we know that this has attracted a lot of conversations, especially from the members of the public. And this is what you're talking about, that so far 3% of basic pay, employer was to match. The maximum was supposed to be 5,000 shillings. Honorable Kuria Kimani is saying that there's no longer that maximum. And therefore, if you earn anything above above 166,000 shillings, then you'll have to pay what 1.5% means for your salary. If, for instance, you make 20,000 shillings, is it basic pay? Probably. In a month, then 1.5% will be 3,000. So you will contribute 3,000 shillings. Your employer will contribute 3,000 shillings. It becomes 6,000 shillings. If you make $1 million, then that's 15,000 for yourself, 15,000 by your employer. What else was in the bill? The proposals were that upon contributing, you would be in a position to purchase a home, or you could withdraw your contribution at the 7th year, or at the expiry of 7 years, or at the as you retire. But you may also transfer these to another beneficiary. The cash withdrawals were to be taxed. Let's hold it there and speak to Mheshimiwa Kimani Kuria, especially on this fact that you could buy a home or you could withdraw your contribution. If it goes to the Consolidated Fund Services, Honorable Kimani, what happens? Can you get back your money? And who qualifies for affordable housing now with the new changes?
Thank you very much, Sam. And I'm going to answer your question straight up, but I will request for something. We have amended 87 different clauses on this bill. And this bill is 130 pages long. And I know the issue of housing levy has become a great discussion in this country because it touches on salaried people. And you know what that means? Is that we are losing the discussion about all the other things that are contained in this bill. And every time I have tried to address this matter, I get frustrated. In fact, I said it here last week that we're reducing the finance bill into a housing bill. So I'm going to answer your question, but I really request you.
No, we'll get to others. Don't know.
But let's address. There's so many other issues that relate to this
Which
bill.
we'll get to.
So you don't just make it about you and I.
No, Honorable Kimani,
that are paying,
please.
the housing levy.
Kenyans are watching.
But having said that,
hold on.
Yeah,
they want to understand what are these changes that you're proposing, because it affects Kenyans and their pay slips.
Yes, having said that, yes, true. So do we have a turnover tax that you're not commenting about, that you're talking about?
We'll get there.
That affects.
Let's be methodical. First,
you're not even talking about the VAT on fuel that affects.
We'll get to that point. First of all, housing levy, no cap, but you can withdraw your money, or you can get a house.
Yes.
What has changed?
So let's get there. The initial provision, as contained on the bill, said that this will come into effect after the passing of regulations. And how those regulations oversaw this was that, for example, you'll get your money after 7 years. And Kenyans were asking, am I sure I'm going to get my money after 7 years? Kenyans were, in fact, Kenyans call it a tax. So what we have done on this, we have proposed, and the State Department of Housing is done with this, and they're going to publish it as soon as, I think, the PS was giving us a commitment of Friday, that the contributions you make into the fund become a rebate when you actually get to own a house. So if, for example, I decide to buy a house in Parklands or in whichever scheme that comes around my area, then the contributions that I've made towards the fund, then I use them to buy that house, which was not even clear in the previous amendments.
So these are houses in the affordable housing scheme or any other house?
In fact, it's about any... The houses done by this fund, when I go to buy that house, I can use my contribution as a rebate towards buying that house.
Who qualifies?
Anybody who has contributed towards it.
So there's no longer the offer that you will receive back your money after 7 years or at retirement or whatever?
Again, Sam, when we listened to the public, they were saying they don't want that.
So you give it and it's gone?
It's a tax.
And Sam, let me give a different example. Let me give an example. Makali Mulu and I are patrons to NGCDF funds. where people qualify for bursaries and scholarships. There's actually a scholarship scheme for the national government. There is actually, like for example, there's the Linda Mama program. There is the Wazee program that gives old people 3,000 shillings a month, when they retire. Where does that money come from? When we decide that Mandera County is getting this equalization fund worth this much more than Nakuru County, where is that money coming from? It's coming from taxes that have been contributed by yourself.
So, in short, what you're telling me, Honorable Kimani Kure, is that the housing levy is no longer a levy, it's a tax, housing tax.
Yes, that's what Kenya
That's the thing.
So you just call it housing tax?
Yes. We're calling it a levy, we're influencing it to making sure that it goes to building affordable housing. But Kenyans told us.
Who will implement those buildings? I mean, the building of this affordable housing now?
Of course, this would be the State Department of Housing. But Sam, remember
not private developers?
The implementers, the implementers of the program is the State Department of Housing. And this, again, we listened to Kenyans. And Kenyans told us to our faces. And I sat there hours on end and told us, come on. In fact, even our opposition called
it. Is that what they told you, really?
Yes.
Okay, maybe that's what you had.
Remember, I have 3,500 pages, 3,500 pages.
Yeah, Dr. Makali Mulu.
Of memoranda from the public. That's what the public told us.
Okay, that's what they told you.
Sam, as I told you earlier.
Understood. What do you make of this? Is it better now?
Now, it's very, very bad now. Actually, the chair will have a lot of problems explaining this to Kenyans. You know why, Sam? The idea of changing it from a levy or a saving, as they used to call it, to a tax is better. That was my wish as an economist. Because in that case, then, you save Kenyans the trouble of following up their money after they retire or after 7 years. You give it out knowing I've given government money, let them do low-cost housing. Whether they do it or they don't do it, that's another question. But let's not be told that after some time I'll get my money back. I think that, to me, it makes it easier. From a tax, what I call basic principles of taxation, the issue of simplicity, we are now achieving it. Some, you are going to be 1.5% going to be taken from your salary, and you forget about it. You might get a house, you might not get, but as he's saying, if you want to buy a house, then you can use that as part of your deposit for what you are buying. But the other thing is, Sam, now, remember, before this change, which the chairman is now proposing, the ceiling was capped at 2,500.
Right.
And at that time, the employers were saying, if you implement this, we'll be either sacking people or we'll be putting people to casual arrangement so that we don't pay the 2.5. Now what it means, me and my friend Kuria here, we are going to pay 7,500 every month. My employer will pay 7,500.
Yes.
Now, what happens to those employers who are threatening to sack at the level of 2.5? Now we push it to...
Is it 7.5 or 15.15?
No, I mean, if you're earning $1 million, it's 15. If you're earning 500...
That's what I'm saying. It's
yes.
1.5% by yourself, 1.5% by the
employer.
So that is 30,000.
So it means now, for me, earlier was
15,000.
Before the amendment, I was supposed to pay 2,500 maximum. And the employer was supposed to pay 2,500 maximum. We get 5,000. Now the capping has been removed.
Yes.
So now what is going to happen? 1.5%, if you earn 500, is going to be 7,500.
Okay.
My employer will pay 7,500. Now the employers are already threatening before this amendment that 2.5 was too high for them. Their payrolls could not accommodate that. And what they're likely to do is, I'm sure they listen to their presentation, we are likely to lay off people, or we are likely to put people on cash arrangement so that we avoid paying. So to me now, this is even a worse situation for the employers.
Okay.
The other thing which is important is, Sam, because I think we need to educate Kenyans. The thing which is going to be important, the idea of making it to a tax is important, Chairman. I think that is, I agree with you.
Yes.
So that when I give my money, if I have the capacity to give, I give it and forget about it. Let Kenyans who have no houses, those who are living in Kibera, in Mathare, get houses. So that the government supports housing program without telling people will get your money back. That is the best approach to it. But then the question is the capacity to pay. And we have said many times, where we are today, and that's what I said before, Chairman, before you came in, our economic situation, where we are today, in terms of disposable income, that is the income you remain with after all the deductions, Kenyans are actually surviving. And I remember, if you remember when we were looking for votes, one of the strong points of Kenya Kwanza government was that they wanted to lift the Kenyans at the lowest level to another level up.
Okay.
Now, what is happening currently, I don't think we are in that direction. And that's why I say, Chairman, you know, when we come here, he is a CPA, a very qualified accountant, I'm an economist. And I think we need also objectivity. We must build objectivity into this debate, so that we educate Kenya.
Yes, your replies. Let's move to the next.
And the objectivity to this particular matter is with all honesty, I shouldn't be paying the same amount of money as someone who is earning 40,000 shillings or 80,000 shillings. With all fairness,
but Honorable Kuria, that is you. There are Kenyans who don't think like you.
That's fine. But the principle of taxation, as my good friend talked about, is equity.
And that's what I'm saying.
So it's not... Okay, fine. The people that are... How many people actually get to earn more than 83,000 shillings a month in this country? They're actually around 10%. How many people... The examples that we're giving... You know, Sam, even when I give people, Kenyans, an example that I'm earning 500,000 shillings a month, they can't understand, they can't imagine that someone actually gets paid 500,000 shillings a month, honestly. And you want me to pay 0.005%?
A few minutes ago, you just told me that you earn $1 million. That's changing.
No, I'm talking about the basic. Fine.
Basic salary.
The good thing I can finally discuss my salary because it's public to me.
Knowledge.
But my basic is around 500,000.
Okay.
Add allowances, it's got all that. So with all honesty, Sam, Kenyans told us, and we did the most extensive public participation. They told me, Chairman, you earn more than 500,000 shillings a month. You tell us that this is a need. You want me to pay 2,500 like you? And I felt, no.
I thought they also
and so did my members.
I thought they also told you that you should avoid it.
They told me, let me tell you, I think one of the most hilarious stakeholders told us that I want to go and do my private thing in the same house like you do. At least I want to do that.
Okay. Interesting. The impact is real, and we'll get to know about it as soon as we get to read more of the report. But at least the take home is that the cap is no longer there, and you can now calculate your salary 1.5% from yourself and 1.5% from your employer. Let's take a look at something else that is in the bill at the moment as published, the Finance Bill 2023, on whose report the House will be looking at. This is the VAT on fuel. The current VAT is 8%. It is proposed to rise to 16%, and of course LPGs is being proposed to be exempted. Does anything change there, Honorable Kuria?
Yes, it has.
What changes?
So I'm trying to say, okay, fine. Yes, we have okay. So what we've done on this, we have increased our VAT on fuel from 8% to 16%. That's a fact. But let me give you a little accounting. When you're dealing with VAT, there are two components of VAT that are very important. Input VAT and output VAT. So what do I mean? The dealers in the fuel sector, they all buy vatable goods and services. So how much they buy their vatable goods and services at? They buy their vatable goods and services at 16%. So that is their input VAT. So VAT is a consumption tax. So VAT is not supposed to be paid by the business. It's supposed to be paid by the consumer of that product or service. So what this 8% meant was because every other rate, not every other, every rate, every vatable rate, every product or service that's vatable is vatable at 16%. It means that these businesses in the petroleum sector were paying 16% input VAT. But when they were claiming for their output tax, they were claiming at 8%, which means there was an 8% deficit. That is what you and I, through our taxes, were financing. So what that meant was this particular business in this sector were perpetually on credit with the Kenya Revenue Authority because they are claiming more tax than they are paying.
Right.
So the most important thing on this particular amendment is to bring everybody in the same vertebral status for their input and output. But what did we do? We have signed agreements with, for example, climate change and climate financing. And our Vision 2030 talks about we need to go to green energy. So we did not just increase our VAT to 16%, but what do we do? What are the alternatives? Bioethanol fuel. We have taken that to zero rated. We have there's a product, for example, called KOKO, K-O-K-O, that provides bioethanol fuel. Those canisters cost, I think, 192 shillings. And that canister for 192 shillings can cook meals for a family of 4 for 10 days. And what does that mean in terms of cost of cooking for that family? Less than 10 shillings a day. Less than 10 shillings a meal. Then, what are the other options? Solar energy, electric mobility. So we have zero rated, and not exempted, zero rated all the other safe green alternatives of energy. Because let me give another perspective, what fuel does. And before I go there, if you notice, most of the vehicles that you find now on the street, especially new cars, are hybrid cars. Because people are moving away from cars that have to be fueled by the normal fuel to buying hybrid cars for them to reduce their cost of fuel. So we are saying, how about if we incentivize manufacturers of electric cars, manufacturers of electric motorcycles, and we get away from consuming these fossil fuels? And what does it mean? We achieve big on conserving our environment. And secondly, we reduce our cost of running these particular machines. 3, we create jobs in that particular sector. And 4, we achieve the... But
of course, Honorable Kuria Kimani, you and I know that the impact of the VAT will be immediate, the 1st of July. It will be immediate that your liter of petrol, liter of kerosene will be more expensive immediately. So before you realize those gains that, or those aspirations that the government has, there'll have been an impact.
Yes, but just to cut us some slack, we have also reduced the ready development levy, the import declaration fee on those particular products.
Okay.
So the percentage, yes, I agree it's going to lead to an increase, but the increase is marginal. Because out of the, and again, I want Kenyans to get this right. We're not increasing VAT from 0 to 16%. Because that is what has been reported, that we're increasing VAT to 16%. No, we're increasing VAT from 8% to 16%, which is 8 percentage points. Out of this 8 percentage points, the reduction on radio development levy and import declaration fee is around give or take 2.5%. So actually, the actual increase, what should be the actual increase in the cost of fuel should be 4.5%.
4.5%.
Yes, because of reduction of RDL and
okay, I hear you, because already we know that the VAT component of a litre of petrol is about 13 shillings. So if it goes to 16%, if everything remains constant, then you're talking about 26, 27 shillings. But then again, you're saying there will be a bit of deduction.
Yes, and RDL, 90.
Levies and taxes. But Dr. Makali Mulu, so the VAT rate on fuel remains the same. A good thing or a bad thing?
Sam, I can see the chairman is really struggling to explain these things to Kenyans. The truth of the matter is, anytime you touch fuel, VAT on fuel, first of all, as you have rightly put it, transport costs will just shoot from 1st July. The way we know Kenyans, and more so Kenyan business people, they will not take that additional cost to their side. They will push to the consumer. Production costs will immediately go up. The producers will not take that cost. They will push to the consumer. I like what he's talking about, alternative sources of energy. But there's also, you need time to kind of reconfigure some of the EVs machines, You need time to reorganize them so that they can use those other alternative sources of energy. For example, the majority, almost 80% of the vehicles we have on Kenyan roads use petrol or diesel. None uses those other, the hybrids where you go battery charge, electric you charge. Very few are doing that. So automatically, before we get to that level, it means there is going to be a time lag where, we like it or not, costs are going to increase. And this is what we are saying, that anytime you increase costs, you know, the challenge with a tax like VAT is not discriminative. Like earlier we were talking about issues where you can actually categorize people and say, Makali and Kuri are earning higher income, so let's tax them more. That is a good principle. It's called progressive principle in taxation, so that those one tax them, you tax more. But anytime you put VAT rate like we have done, the truth of the matter is now, every Kenyan will have to suffer as a result of this. Every Kenyan, irrespective of your class. So the same Kenyans we are saying they have no income even to feed their families, will have to make sure that when they come into Nairobi from their estate, you pay more. When you are buying any product which is produced by factories, you are likely to pay more. And you continue worsening the situation for Kenyans.
Okay.
And if you remember, Sam, 2018, and me and Korea were in Parliament. This VAT was pushed from 0 to 8. You remember that time even people exchanged blows in the House? We said no as a House. But what happened? When it went to the President, he sent back a memoranda with the reservations. And because we could not raise the two that's required to say no to his proposal, it became law. So now this is another 8% now coming in. I remember at one point the Finance Committee, the same committee at Chaluchi chairs, that time it was being chaired by Gladys Wanga. And Kenyans were wondering what makes the cost of fuel so expensive in this country. They did analyze the kind of taxes and levies in the costing. And I think that's where you're now saying some have been reduced by 2.5% to make it 4.5. Some like, I don't know, the railway development levy, you're saying you have reduced it and other levies. Yes. So that it comes to 2.5. But whether it is 2.5, whether it is 4.5, this VAT increase to fuel is going to affect all sectors of the economy. Right. That's the basic principle.
You know, I thought in 2018 the bill was first passed with 16%, came back, but there was some agreement that it was reduced to 8%, and it actually attracted...
No, the increase, it was actually from 0 to 16, as you were saying earlier.
That's what I'm saying, because you're saying that you were vetoed by the president.
Yes.
But I thought there was actually an agreement by the House, by partisan...
No, there was even, you know, it was...
on 8%.
Yeah, it was 0 to 16.
Yes.
Then through negotiations, it came to 8. But the House even said no to the 8.
It passed 16.
No, it actually passed.
Yeah, it passed. That's what I'm saying. The House, the members. The members, me and him, we said no. But when we went to the president, he did not sign it. So it had to come back to the House, and it passed.
That's why I'm saying, Sam, the difference between this government and the previous governments is we have the courage to make the right decision. And even when, and I agree with the sentiments of most of Kenyans, even when Kenyans feel that's not the best decision, we are happy to make some decisions not so popular now for the better of tomorrow.
Okay.
You know, you have already put it. In 2019, the National Assembly, which Dr. Makali Mulu and I actually sat, when whatever happened, we actually passed this VAT to 16%. It is actually the former president who brought it back at 8%. If he didn't, we would be at 16% VAT. This 8%, and I really want Kenyans to understand this, this 8% increase in VAT on fuel, there is no difference between charging fuel at 8% and what we're doing in subsidizing fuel. Because your taxes and my taxes are going to subsidize this 8% to 16%. Because as I rightly explained, your input tax is at 16%, your output tax is 8%. The businesses don't pay VAT. VAT is borne by the end user of the product or service. So actually, when now you're buying that fuel, you are subsidizing. So we have the whole country, and because this goes what we call VAT claims. Because now, what happens with these particular companies, they are always on what we call VAT credit. They're always claiming back VAT. And this claiming back VAT is paid through taxpayers' money. The only difference is that whatever we have appropriated this evening, I think it's 40 billion shillings, to pay for subsidy that was incurred by the last regime on fuel. It's just that for that subsidy that was done by the previous regime, it had come through Parliament for approval, but this subsidizing of 8% to 16% is being done without you and my approval, because it's done directly by Treasury, through Kenya Revenue Authority, through what you call tax refunds.
You know, you say that cocoa and other renewable energy sources, but if I drive a car that uses petrol, or I run a plant that uses diesel, I can't use cocoa.
That's true.
So the impact is immediate, isn't it? Despite all the explanation that you're giving, the cost of production is just about to go up.
The truth is going to, but at what percentage, which we're saying. And that's why we're saying, Sam, let's tell Kenyans the truth. I agree we're increasing VAT on fuel, a fact. But you're not increasing it by 16%.
Okay.
We're increasing it by 8 percentage points. And not just that, we are lowering Railway Development Levy and IDL on this, so that we cushion you, so that we stop subsidizing the use of fuel.
The subsidy was benefiting the Mwananchi. Now Mwananchi is paying back for it.
It wasn't. It was benefiting the businesses.
No, fine, you can make that argument, but the fact of the matter is that
it was subsidizing, it was benefiting
the
the
price at the pump in August 2022 was 159 shillings. The subsidy was 74 shillings.
The rate of inflation in 2022 was, I think, 9.5%.
No,
I'm just saying.
I'm not fighting you.
You cannot make that statement.
No, I'm just saying. Listen to my explanation. I'm not fighting you at all. I'm simply saying that at that time, Mwananchi was paying 159 shillings at the pump.
Yes.
Today, they're paying 182.
Yes.
On 1st of July, they'll pay more. Maybe 200.
More like
and the difference between what they were paying there, there's a difference in rate of inflation between what was last year and what is on this year. There's a difference on exchange rate between Kenya shillings and the US dollar, because we buy this in US dollars, and there is a general increase in prices of fuel globally.
Okay.
You should finish with that.
Anyway, Sam, simple statement, Sam.
Just alone, Dr. Makali Mulu. Let's take a look at something else that is contained in the Finance Bill 2023, and this is on turnover tax. Remember that the bill proposes to raise it from 1% to 3%, and this would mean to affect the businesses that earn between 1 million...
We have cushion.
No, currently, those affected are between 1 million shillings and 50 million shillings per annum. It is being changed to 500,000 shillings per annum and 15 million shillings per annum. That would mean that every business that earns 1,370 shillings on a single day, should they work for 365 days in a year, they will be paying a 3% turnover tax. And those that make 41,095 shillings every single day for 365 days, which is 15 million shillings in total, they'll have to pay 3% of the tax. Let's look at a different page that will tell us how much that would be. Well, it's not there, but that's what is in the bill. What changes in the report of your committee?
I think every time you read there, I'm not able to see. But what we've agreed, again, the reason why we carried the most aggressive public participation is because we listen to Kenyans. The proposed bill was proposing to start turnover tax at 500,000 shillings through 15 million shillings. Yeah. So we have amended that. So now turnover tax, the lower band is 1 million shillings to 25 million shillings. So because we realize that the people that are going to be asked to pay this turnover tax are people that earn, I think, that have actually have a sales of around 1,380 shillings a day. So we have doubled that, so that the turnover tax, you need to sell at least 2,760 shillings a day, and we have increased the band to up to those people that have a turnover of 25 million shillings. But let me tell you the whole truth.
The rate is still at 3%?
Yes, and remember, and again, a small background, the rate was not actually 1.5%. The rate that was approved by the 12th Parliament in 2019 was 3%. So what changed to 1.5% is during COVID. So when COVID came, government thought about how do we incentivize our businesses, and that's when the former president actually brought down the rate from 3% to 1.5%. And now you're saying that fine, we have dealt with COVID. We don't have lockdowns anymore. We can move around. We do not have curfews anymore. So our businesses are slowly coming back to normal. So that's why now we are proposing to go back to where it was. It's not an increase. We are going back to where it was originally at 3%. But what this committee has done, we have now cushioned those people that that have a turnover of $500,000 shillings and doubled it to only get into the tax net or for this part turnover tax of those who actually have a turnover of 1 million shillings a month. But let me tell you what some more truth. So the turnover tax is an advance tax. And what do I mean by it is an advance tax? It actually means that if I don't want to pay this at 3%, I can pay the normal profit after tax or corporation tax of 30%. If I just do my returns, and say this is my taxable, this is my income,
right,
and these are my allowable expenses, deduct tax allowable deductions, and tax the net, the taxable profit at 30%. But we're also understanding that most Kenyans don't want to go through that process. So saying, fine, if you don't want to go through that, then you can pay this turnover tax.
I'll get back to you, Dr. Makali Mulu. What does this tell us? I mean, look, cost of production will go high because of VAT. Cost of the payroll will go high based on, especially if you have many workers that earn over 166,000 shillings. And many other issues are happening. For turnover tax to be rising, without the explanation that it was because of COVID stimulus package or something, and then also lowering the band from 1 to 50 million shillings to now 1 to 25, what are the benefits of that?
You know what has happened, Sam. This was actually one of the controversial proposals, the issue of 500 and 3%. And what was happening, that was going to bring a lot of Kenyans to the tax bracket, and more so the normal mama bogas, those who sell mutura there, those who sell. And I think to me, the main concern of this, and which I think still has not been addressed, Sam, is the fact that you'll be paying this irrespective of whether you are making profit or not.
Right.
That's still the main concern. That I don't expect when you are making losses so that you pay taxes. But he's putting the caveat where he says the other option is whether you work throughout the year and then you can do your tax returns the normal way you do it, and then you pay the 30% on profit made. So it's a matter, as a Kenyan you can choose whether you want to pay the 30% or you want to pay this one, which doesn't exclude you even when you are making losses. If I were a Kenyan, I would pay the annual one, because more likely, I don't think Kenyans will, this level of Kenyans, Kenyans who live from hand to mouth, and most of them are not likely to make any huge profits, which can actually make them pay the 30%. But all said and done, it's an improvement in the right direction. We had said we need to move this back to the million, where they have pushed it.
Right.
But the only challenge is they still retain it at 3% and not 1%. Because the truth of the matter is, I don't think Kenyans have really gotten out of that situation which they were put in through the COVID and now the Russian war, with all the cost of commodities increasing. So if it were me to cushion the low-income Kenyans,
right,
I would have maintained this at 1% and then retain $1 million. I don't mind about the upper limit of 50 to 25. That's manageable, because I think that is still, the lower group will still be taken care of.
Right.
But the animal in the room, the elephant in the room, is the fact that whether you make profit or you don't make, you are paying. Yes.
But you have an option. If you don't want to pay that, then you go to either corporation tax, or actually, if it is SME, and it's a personal business, like you are the self-employed, then you are allowed to declare your taxes through the regular Income Tax Act, through the regular bands. So where if you make less than 24,000 shillings a month, for example, you're not going to pay any taxes.
Okay. And how do you do that? Because if you make 1 million shillings in a year, and this tax is payable every month, isn't it?
The rate is annual.
Yes.
But you can choose to pay it per month. in terms of its administration, what we want to know is, for example, even corporate tax, for example, the way corporate tax works, you pay 30% at the end of the financial year. But there are proposals that say, fine, at a quarter, you do your predictions and say, I expect to pay this much, so I pay this as an advance tax, which is deductible from my tax that I paid at the end of the year. And what you're saying is, come on, Sam, many Kenyans don't want to do that. They don't want to find out what their taxable allowances are, what are taxable deductions are. So if you do not want to go through that step, there's a simpler step for you. Just pay 3% of your turnover per month. And just to...
But before you go away from that point, I thought...
If your turnover per month is 100,000 shillings, 3% of that is 3,000.
3,000.
So that's what I was asking. So this is payable every month, isn't it?
No, the law talks about annually, but now you can scale down to monthly.
Some is just like the way the landlords are doing, where we are paying 10%, they are paying 10%. So what you do is, out of your monthly collection, you just pay 10% of the collections. At the end of the year, you don't send in tax returns. It's exactly like that.
Okay.
So from your sales, you can just be paying 3%. If you were lucky to hit the target of 1 million in terms of sales, and then at the end of the year, you don't declare anything because your records will be showing you've been paying every month.
Okay.
Now,
question, Honorable Kuria. So with all the changes that you've put in place, and I don't know if there's one that you'd really want to highlight, how does that affect the collections of the government? The projected collections? What is changing? Just by this finance bill, the proposal that came to us was collecting around 210 billion shillings. And the amended bill that you've done actually has a potential of raising 311 billion shillings, give or take. And we're talking about, and this is the beauty about Kenya, we're talking about a very informed Kenyan, where I told you when I was a village, people were asking me what this finance bill is about. My grandmother was asking me whether I invented the finance bill, because we have a population that's now very informed, thanks to what the media is doing, thanks to digital and to social media platforms, where, of course, the bad side of it is the misinterpretation of facts, but it has a potential to really raise like 311 billion shillings and potentially take us through the deficit that we had. But so that you don't forget, Sam, you actually didn't mention about the importance of getting the facts right. And I think I've had this over and over and over again. And if you just give me less than a minute, I want to correct this. There has been this narrative that we are taxing insurance compensation. What's happening?
Page 240 of the bill, clause section 30, clause 9. And I want us to read together. Where a bona fide owner of taxable supplies, so keyword there is taxable supplies, who has deducted input tax under subsection 1 is compensated for the loss of the taxable supplies. The compensation shall be treated as a taxable supply. If the compensation includes VAT, the compensation shall be declared and the value of added tax thereon remitted to the commissioner. And if the commission does not include the VAT, the compensation shall be declared as subjected to VAT and the tax remitted and the commissioner. So what people are reading here is they're skipping everything here and talk about compensation for loss and taking that as an insurance compensation and saying it's going to be subject to VAT. That is far from truth. And people are saying,
what is the truth?
People are saying, if I get involved in an accident and I lose my leg, if I get compensated for my leg, then I'm going to be charged 16%. If my car gets involved in an accident and I get insurance compensation, then that insurance compensation will attract 16% VAT. But I want to ask, is my leg a taxable supply?
It's not.
Is my motor vehicle, the one that I drive to work, a taxable supply? It's not. So that is far from the truth. So what this actually means, to give an example, the studio that we are in here, your TV there is a vertable supply. Your camera here is a vertable supply. Your MacBook is a vertable supply. This furniture is a vertable supply. If a fire happened here, so remember, when you bought these products, you paid input VAT. So in your sales, you are actually claiming this input VAT from your output VAT, because this VAT is not borne because you are a business making entity. So we are saying that if a fire happens here and we compensate you for the TV, for the video camera, and for this equipment and for your laptop, remember that VAT you had claimed, we refunded you your VAT. So saying, because we refunded you that VAT, you need to refund that to KRA, because it was a taxable supply. So if this was my personal premises, and it was my own TV, it was my own chair, it was my own fridge, it was my own oven, that is not a taxable supply.
Okay.
Because I'm the final consumption.
If I get you right, assuming this laptop, it's actually mine, if it was bought by the Raw Media Services and the company claimed input VAT because they were charged VAT at the point of buying, so in their sales, they also claim it back, and now you've been given, assuming it's worth 200,000 shillings, it's not, 200,000 shillings from the insurance company.
It is worth 200,000. So
let's just stick to the example. 200,000 shillings is what the company receives from the insurance firm.
Yes.
So you're saying that out of that, the VAT component has to be given to KRA?
Let me give a better example. The laptop may not be such a good example. Let's assume you stocked goods for... You sell laptops. In fact, that's the best example. You sell laptops. So you're using very expensive machines, a MacBook Air. So you have 1,000 MacBook Airs in your premises, it's a taxable. So you sell laptops. Okay. So when you bought these laptops from your distributor, you paid 16% VAT, but you didn't sell them. Okay, they got burnt. But you had claimed 16% VAT.
But I thought you claim as you sell.
Yes, exactly. Now that is the exact problem we're trying to cure. So when you get paid your 200,000 shillings laptop, it has VAT. So the insurance compensation will compensate you the value of that laptop, including VAT. Okay? So when you sell that laptop, you will claim output VAT. So how many VATs have you received? You paid one VAT when you're buying. You got compensation for VAT, and then you claim that VAT when you sell your MacBook. So you are actually getting compensated for your VAT twice. This is what this is curing.
Is that true? Because you're procuring that laptop, I mean, the principle of indemnity.
Yep.
So you're bringing that laptop back to your shop.
Yep.
You sell it, you get paid VAT.
Yep.
Shouldn't you now, Shouldn't you now claim it at that point of sale?
But remember, you get paid for your input. Okay. So the compensation, indemnity, yes, we should take you ideally to the place you were before the insurable loss occurred. Agreed. And that's where we want to get you. So that once now we pay you VAT, we are paying you back VAT that you had spent when you're buying your laptop, right? So we have compensated you.
No, you're not. Because
you know,
what do you get of that?
No, let me try again.
Let the chair just answer a simple question. The question is,
just allow him.
By this law, are you restoring some to the place he is
100%.
after banning?
100%.
Because that's the concern. The concern is that you are disadvantaging people who have been compensated.
No, we're not.
Instead of restoring them to the same place, as expected through the principles of insurance, you're actually making them worse.
Let me try again, Daktari. So you paid VAT on that laptop, okay? So you will claim that VAT when you sell the laptop. But now we are paying you for the insured loss plus VAT. So that means that we're actually paying you back your VAT twice. So when we compensate you for that VAT, if we compensate you for that laptop without deducting VAT, and you get to sell that laptop with VAT, then you'll be in your back in original position.
Okay, Honorable
it's quite technical. It's quite technical.
There's something there. There's something there that needs to be looked into.
It's
Let's take a look at
not clear
the feedback and what Kenyans are saying this evening. I almost said morning. I've been here since morning.
Yeah, Paul.
At Citizen TV Kenya, at Sam Gituko is the feedback route. Ras Bashir Wera is saying that if our MPs feel the pain of common mwananchi in terms of cost of living, cost of electricity, they would have reduced the taxes on basic commodities and withdraw the housing levy. Andrew Sule is saying the reason why the Finance Committee is adamant about having the housing levy, despite public disapproval, is because it is not about housing. It's about a yet-to-be-known reason, okay? Frank Orinde, reducing the housing levy is admission that Kenyans are not only choking with high cost of living, but it is also an acceptance that the proposal is a burden. 1.5% makes it 1.5% makes it even worse, and no one will ever set foot in those houses. A mirage. That's according to Frank Orinde. Gentlemen, I have to thank you and free you because at exactly what time is it? 9 or 9:30?
Yes, 9:30.
9:30. You should be in the house to debate. I'm just wondering, Dr. Makali Mulu, what will be your take? Because initially your side of politics was saying that this has to be rejected in totality.
I think from the discussion, Sam, and there's one thing I just want to say which we have not said. Sam, if you look at this bill, there's a lot of movement of items from zero rating to tax exempt. That's automatically lead to increase of costs. Because zero rating is better in terms of taxation than tax exemption. So anywhere where you read that we have actually moved from zero rating to tax exemption, things are getting worse. The other thing I want to say is the chair has not commented on the issue of the tribunal levy of 20% when time we have a case. I think it's important he comments on that. But my closing shot is that if things have become worse than they were even before these amendments, automatically now we have a better reason to say no to this bill. I think we have a better reason to say no to this bill.
Yes, thank you,
as you close, yes.
And the good thing, I'm happy that the issues are raised. I've got good news for Dr. Makali Mulu. We have actually moved back the items that were tax exempt to zero rated, including tea and coffee that's going to be used for export, manufacturing of fertilizer, manufacturing of pesticides, manufacturing of pharmaceuticals, manufacturing of human vaccines. All those materials are now moved. We've now moved them back from tax exempt to zero rating. There was an ambitious clause that required you to deposit 20% with Treasury if you felt aggrieved at the tribunal. We have actually dropped that. We've deleted that amendment. So because we won't allow taxpayers time to go and litigate in our courts, there was a proposal to have withholding tax and VAT and excise duty being paid within 24 hours. We have actually extended that to 5 working days. You know, we're dealing at a time when there is this aggressive program of providing school feeding to our schools. We have now zero-rated all food supplies that are going to go to the school feeding programs, you know, across the country. There's so many things that we've actually done to incentivize our manufacturing to ease because of doing business. For example, the excess duty that was being charged when you do bank transactions was lower than what you got charged if you use the same service on digital platforms, on digital lenders. We've actually now harmonized that, so that the fees and the excess duties that you pay on digital lenders platform is the same that you're going to pay on the banking sector. And we're hoping that all this is going to yes, on the withholding tax on content creators, we've reduced that from 15% to 5%. All things are good that I think are good for Kenyans.
Oh, all right, that's an important point, that digital content now, on their payments, they'll pay 5% tax instead of 15%. But of course, this is still a bill. It will have to be considered by the House, approved or rejected, with amendments or without. Whatever happens, you can be sure that Citizen TV got you covered. And tomorrow we spend our time and energies focusing on that report, which Honorable Kimani Kuria has agreed that he'll be sharing with me, so that we can break it down and bring to you what you should or you're required to know as this conversation continues. My name is Sam Gituku. See you again some other time. This has been The Explainer. Bye for now.